Moving on to a couple of names which did well yesterday, right? And no surprise rather, but Shipping Corporation of India delivered what it did, which was a 19.59% uptick. Almost anything which is in the broader end of the spectrum is a quality name and has underperformed, has actually rallied very, very significantly. And just tells you the texture of the market likely be shifting a little bit. It might not be a bad idea to look at quality mid caps, which have been beaten down, have not performed, and might start performing. So bear that. That's a very powerful tool and a way of thought to make money. The other one is State Bank of India, up about 7% in trade yesterday, and just shows that PSUs are not out of favor at all. Now, that's the debate with Parag Thakkar today. Parag bhai, the point around SBI having rallied is granted, but SBI rallied versus an HDFC bank and an ICICI bank over a 2-year period from 2020 to 22, over a 3-year period from 2020 to 23, over a 4-year period and over a 5-year period. At any point of time, if you would have thought that SBI has rallied enough, it only rallied more.
Yes.
And still the valuations are 1.5 times.
Yeah. So by the way, I first bought SBI 8% of my fund at 218.
Exactly.
And that was Motilal Oswal's note, so I'll give credit to them. Nitin, the analyst, wrote the note and I was fully convinced with it. And at that time I was in ICICI Pro, and from there till today, I have also been a very big bull of SBI. And I have been vocal about it on your shows also. But from here on, I think in my view, the current RBI governor stance that I will give preemptive liquidity in the market, okay, which is very, very important, right? Market is liquidity is 2 lakh crore plus surplus in the system. This augurs well for guys like HDFC Bank, Axis Bank, those who have higher CD ratios, them also. And see, one thing which has actually helped all PSU banks to get re-rate is asset quality. Earlier, what used to happen in 2007-8 cycle, private sector banks like HDFC and Kotak refrained from giving loans to power plants and infrastructure and real estate and all those things. So their asset quality was pristine. While PSU banks did that, and some private sector banks also did that, and they suffered till 2021, till everything got cleared. So after 2021, PSU banks' asset quality and private sector banks' asset quality both have remained superb.
Exactly.
So that is why this valuation gap has narrowed. Now I'll come to the point that why it should be, this gap should be maintained.
Okay. Because
PSU banks don't lend to high yielding assets. So their ROAs will never go above 1.3, 1.4%. Bank of Maharashtra is above 1.4%. SBI will reach 1.3%. HDFC Bank, even after the merger, where the huge amount of mortgage, low yielding loans came into their books, they are still at 1.8, 1.9% ROA. Right? So I'm saying that if HDFC Bank is at 2% ROA next year and SBI is 1.3% ROA, that valuation gap has to be maintained, right?
Why?
No,
why
ROA.
ROA.
Basically, ROA is nothing.
No, but SBI is actually behaving like a private bank, lending like a private bank. Practices are like a private bank.
No, everything is correct, but ROA, ultimately it boils down to ROA. And I don't believe, and I have a different view than many other people, that ROE is the right way to look at it in banks. ROE is just ROA into leverage.
Yeah.
So if you leverage more, your ROE will be more. Right. So ROA is the right thing. HDFC Bank sustainably will deliver 2% ROA from here on. And now that CD ratio pressure is even lower from regulator, they will be able to grow ahead of the system. I'm 100% sure. And look at, we'll see March quarter results, how they do on deposits, because that is what everybody is going to look at.